All right, let's call the meeting to order. It's 10:02. Sorry, before we start, Kathy, I saw you had your hand raised. Did you have a question?
When you get to the first item on the minutes, I'm ready to make a motion with a slight change.
Okay, well, let's talk about the minutes. Is there a motion to approve the minutes, or?
I would make a motion to approve with a correction on page 2 in order to lessen LESSEN instead of ON. That'd be on the 4th paragraph on page 2.
I'll second the motion.
Right, all those in favor?
Aye.
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 Okay, those minutes pass. Then with that, we'll move on to our obviously main topic of discussion today, housing market study, and further discussion of that. I believe I'll turn it over to Julia, who's going to take us through that discussion. Hey, John.
Great, thank you. Rebecca, are you going to allow me to share my screen?
Nice beanie, Arthur.
Sorry, guys, it's better than my hair right now, so.
Okay, so I apologize for those of you who didn't hear my initial spiel, but my my IT situation is a bit different than what I'm used to. So I'm asking my husband, who knows this system better, because I couldn't make it to my office because there was entirely too much snow. So I'm using his system. So the only thing he said is that I needed, Rebecca, I believe you're the one in charge, or maybe Peter, it's you. If somebody has a question and they raise their hand, I don't think I'm going to be able to see it on my end. So you feel free to just interrupt me and we can take the questions from there.
Okay,
Perfect. Okay, can you guys see my screen correctly and everything?
Yes.
yes.
It's okay, perfect. And if I do this,
Mhm.
okay. Okay, perfect. All right, great. Thank you. I'm good. Okay, so as Peter and Rebecca both mentioned, I am here today just to talk briefly about provide an overview of the housing market study and needs analysis that we did back in 2019 and 2020. My name is Julia Smith. I don't know if I met all of you, but I just will give a very brief, this is from the legal department, disclaimer of the work that we do that's in all of our reports. Brief description of the company, and then go straight into the meat of the report. So Novogradac and Company, Novogradac Consulting, it's a subsidiary of Novogradac and Company, so same thing. But we are basically a public accounting firm and consulting firm, and we are part of the consulting division, Rachel and I, and we do basically market studies, appraisals, and housing needs assessments, and we specialize specifically in affordable housing. We do luxury market rate, high-end things as well, but we really do specialize in affordable housing developments. We've done over 2,000 market studies and appraisals per year since 2003, and about 25,000 reports nationwide since we first started as a firm. And this just gives you a sort of geographic distribution of where those projects have been. So you can see we've done quite a few throughout the entire country. Rachel is the partner that's associated with the project. You guys met her back in February of 2020. She came out and gave the final presentation. She started at Novogradac in 2003, and as you can see, sort of worked her way up. She spent the majority of her career at Novogradac and became a partner in 2017.
Hey, Julia.
Uh-huh.
I think Rebecca might need to advance the slides for you.
Okay.
I don't think
It's not going through on your end?
it's not going through on my, I'm still seeing the first page.
Okay. Anybody else having that?
I am.
Okay.
I'm still seeing the first page as well. So Julia, I think what you need to do is just to hit enter on your end and it'll advance the screen.
My screens are changing. Did that work?
No.
And it says that I am actively screen sharing.
Mm,
And you're still not seeing anything changing.
no, but we have the presentation on our end. We could bring it up here and then you could cue us.
Yeah, it seems like it should be working, because it says I am actively screen sharing. Let me stop the share and start over and see if that will change it.
Okay.
We
Um,
love technology.
I know.
Right.
It does say only one participant can share at a time. I don't know if that worked. Okay. So are you guys now seeing this?
No.
Same thing, just the
Now
first page?
We're seeing your cursor move though, so that's.
Oh, okay, that's a good sign. Let's see if
Yep.
this works then. All right. Now do you see is it changing now?
No, I think you might just have to page down from this, not even from the slideshow. Maybe that's the problem. I don't know that you can do it from a slideshow.
Okay. Let's see. How's
Yep.
that?
Yep, there you
Okay,
go.
I can do that.
Yeah,
There we go.
I'll just click down on the thing rather than show. Okay, perfect. So there's the disclaimer I was talking about, the legal description. This is and are you now seeing the slide that says about Novogradac and Company?
we are.
Yep.
Okay, perfect. So now this is the description of the company that I gave briefly. Here's the distribution of the work that we've done and where we've done it around the country. And then here's the slide where we stopped. This is Rachel's background. Again, she started as a researcher all the way at the bottom in 2003 and worked her way all the way up through the company and became a partner in 2017. So she's been a partner now for 4 years, and she's the main partner on this project. And then I have been working with Novogradac since 2006. I've sort of left the firm, but also stayed on as a consultant while I pursued my graduate work. And so I've been there working consistently since 2006, but not technically as a full-time employee, but I work full-time for them, basically. I'm almost done with my PhD. Hopefully I'll finish in December. So that's a nice little update.
Good luck.
Thank you. I might need it. All right. So moving on to the to the meat of the report. So you guys probably know this. So stop me if I'm giving too much background, if this is something that you guys all saw, because I'm happy to just move on. But basically the general timeline was we started in the fall of 2019. We did most of the data collection in the fall and the winter of 2019, and then we wrote the report and finalized that in February of 2020. The right side of the screen gives you a brief description of the outline of the report. So a description of the data and methodology that went into it, the demographic profile, the economic profile. Then there's a big housing analysis, a gap analysis, which is actually a housing gap analysis. And then a summary of the different modalities that we used for public participation to make sure that we had public feedback incorporated into the report and into the results. So the data and methodology involved 2 steps. One was the secondary data analysis, where we use data from the Census Bureau, which I'm sure you're all very familiar with, as well as some proprietary sources, including Esri demographics and things that Novogradac collects themselves. And then we also did the primary data analysis. So that included a survey. So we basically called and interviewed every single rental property that you guys have there in Shorewood, or attempted to, I should say, because not everyone participated. And then we interviewed local realtors, and then we held the listening sessions, and then we also did an online survey. So just a general note on these different types of data. In terms of secondary data, these are the data sources are always based on samples, not the entire population. So there's always a margin of error associated with each of the numbers that we include in the report. Unfortunately, for smaller communities, those margins of errors are much larger because there's just not as many people. And so, for example, Shorewood, in the data set that we used for the particular report, it says Shorewood has 6,344 housing units, but the margin of error is 198. So basically what we're saying is if you plus or minus 198 around that original estimate, that's what we know for sure is the number of housing units in Shorewood. Does that make sense? So it's more of a range where we can say we know for sure this range. And this is the Census Bureau's numbers. This is not, but it's me telling you, because a lot of times people look at those numbers from the Census Bureau and say, well, that doesn't make sense because last year's number was X and this year's number is X plus 5. So that must mean that we've increased. No, that's not what it necessarily means. So it's important to just keep that in mind. The strengths of this obviously are that it's the most widely used data set that basically everyone uses. City planners, city officials, government officials, consultants, everybody uses this as their primary data set for demographic trends. The weakness, again, is primarily for smaller locations like Shorewood. You have to use what's called 5-year estimates instead of a 1-year estimate. And what that means is the sampling occurs over 5 years. So the data set that we relied on primarily for the report goes from 2013, to 2017. That's when the data is collected. And then they call that the 2017 5-year estimates. So in reality, it's data that's being collected over a 5-year period. If it's a larger place, say for example, Milwaukee, you can get 1-year estimates. So you can actually look, what was the change from 2016 to 2017. For a place like Shorewood, you can't do that. So that is the primary weakness. But unfortunately, there's really no solution to this problem other than you going out there and collecting the data yourself, which is, cost prohibitive. Nobody would ever do that.
Okay, so I'm sorry, could you just please, the greatest disadvantage of, or thing that we're seeing here that might be a problem with the data is?
It's not necessarily a problem. It's just something to keep in mind. So I'll get into it a little bit later, but basically because you're having to use 5-year estimates, you're not going to be able to say, for example, I'm going to provide you with some updated demographic characteristics from the report to today. You're not going to necessarily be able to say, okay, well, in the report, it says that there are 6,344 housing units and her updated demographic or her updated number is 7,000. So therefore, the number of housing units has increased. You're not going to be able to say that because the time periods of that 5-year time period are going to be overlapping. So the 27, because we relied on the report for 2013 to 2017 5-year data period. The most current one that's been released is 2015 to 2019. So those years, 2014 and 2015, or 2015 and 2016 and 2017 are in both data sets. Does that make sense? So you can't compare. You can't compare overlapping time periods, basically.
Thank you.
So then we supplement that, of course, with the sort of more on the ground local data, and that's the listening sessions that we held and then the online survey. The strength here is obviously that it provides opportunities for public participation, which is really important, especially when you want buy-in to whatever the findings are and whatever you guys' next steps are decided to be. The weakness, of course, is that it's not typically representative. We do the best that we can in terms of having some sessions during the day, some sessions in the evening, different days of the week, different times of the year, or different times of the month, I guess, in this case, since the time period was more condensed. But that's all you can really do. There are people who might be working 2 jobs who just simply can't, they don't have the time to come to an event like this. So then we supplement that with the online survey. So that way people who don't have the time to come to an actual in-person session have the ability to still provide feedback and participate in the process through this online survey. But again, not everybody does that. So that's sort of the downside of the primary data collection component of the report. And so I just added the final caution, and this speaks to Kathy's point. Just be careful when you're trying to compare the estimates across the different data sets. And I'll give you a more detailed example as we get into some of the actual data points. Okay, so Rebecca had asked that we basically spend most of the day today talking about focusing in on the affordable housing discussion, since that's what you guys are most interested in, but also doing just a brief overview of the report itself. So I'm just going to spend a couple of minutes talking about the sort of demographic characteristics of Shorewood that make Shorewood unique, and then we'll go straight into affordable housing from there. But before I do that, I want to go back really quickly to that data point and give you a sense of what we're going to get into. So let me see if I can pull up the actual slide. Well, we'll start here, actually. This is easier. Okay, so in any case, this slide shows the population, the historical and current population of Shorewood, as well as projections. What makes Shorewood unique is that in this case, when we did this report, the data that we used for the report, remember, is coming from the end year is 2017. So it is a little bit dated by now. And to give you a sense of why that is, so the way that the Census Bureau releases the data sets, the 5-year data sets, which is what Shorewood would be relying on all the time, those come out around December of each year, the year after. So the 2017 5-year estimates came out in 2018. Yes, that's correct. And then the the beginning of the following year. So when we were collecting the data, the 2018 data set had not been released yet. It was released when we were finalizing the report. So that's why the data that's relied on in the report goes up through 2017. Since then, they've released the 2018 5-year numbers as well as the 2019 5-year numbers. So the data that's in the actual report that you guys look at, that PDF, is about 2 years past what is considered current. Does that make sense to everybody? Yeah. Okay. I don't think that anything has changed really dramatically based on just a preliminary look at some of the newer numbers, but I'm just bringing that up so that you guys know. And I would also say the Census Bureau recently released a sort of disclaimer saying that they're not going to release the 2020 numbers because of COVID related impacts. So now they're trying to decide what to do with that 2020 data. There was, of course, obviously the 2020 census, but they're trying to figure out how do we account for all of the difficulties that we encountered when trying to collect this data, and how do we make sure that the numbers that we put out there are actually going to be accurate. So there's been some delays in terms of the release of the 2020 numbers as well. So I don't think it's unreasonable for you guys to really be thinking about this as still fairly contemporary, in terms of the data, the specific trends. So don't worry. In other words, don't worry that it's really dated. Mhm.
Just out of curiosity, just for the trends, the projections, that right side. So is the projection just a continuation of the trend line of the historical and current, or is it factoring in other components to?
Yeah, the
the
state
projection?
actually puts those projections out. And so there's a lot of stuff, a lot of sort of different data points that goes into that, rather than just a trajectory, rather than just the standard trend. So if you look at, you can see with Shorewood, the line is not straight based on the previous numbers. There's like a dip and then it goes back up. So they're definitely factoring in something else going on there. But I will say one of my primary points was going to be actually that they have released the 2020 population number for Shorewood. That's the only thing that they released because they're required to for the redistricting. And so they have released 2020 populations for all areas. And in fact, the 2020 population number for Shorewood doesn't quite jive with the projections that the state had. So these projections are going to be modified based on the 2020 census counts.
Under or over?
Under, they were under.
The
projections are
projection
under.
was under, okay.
Correct, yes.
There's more growth than was expected.
Correct. So then moving on again, what makes Shorewood unique? One of the things that we looked at was the population by age distribution. And these are all probably things that you guys know, but the median age in Shorewood is actually significantly lower than many of the comparable communities that we looked at. The median age was at the time, again, this is the 2017 5-year number, was 35.6. And in fact, here's an example of if you want to compare trends over time, the way that you have to do it is look at those 5-year periods, but make sure that they're not overlapping. So we're looking at the data that is comprised in our report is the 2013 to 2017 numbers. They call those the 2017 5 years. So if you want to compare that and say, well, how has this changed over time? You need to compare it to the previous 5-year estimate that does not have any overlapping years. So in this case, as you can see on the slide, it would be the 2008 to 2012 time period. Does that speak to your question earlier, Kathy? So that's how you would compare over time trends. You're not able to compare 2016 to 2017 because they don't release those numbers for a community as small as Shorewood, unfortunately.
Can you go back and say what the census count population was for Shorewood in 2020?
I can, let me go down because I have a slide at the end of these, because all of these slides are based on from the report, but I have some slides at the end with updated demographics. So let me just slide down and I can definitely do that. 13,859 is the estimate from the 2020 count.
Thank you.
There, I mean, I will say it's possible they tweak that a little bit, but I don't think that they will. I mean, it's rare that they put out numbers and then later come back and say this was wrong. But as you know, of course, COVID just threw a wrench into everything for everyone. But in particular, the census, and then you add sort of on top of that the complexity of them trying to cut the counting period short, the previous administration, and so there were some difficulties there too, where they didn't feel like, and not specific to Shorewood, but this is just sort of nationwide, that the statisticians are now trying to address how do we make sure that we didn't undercount certain communities and undercount certain populations that we normally would have done more door knocking to try to make sure that we followed up and made sure that all of these different types of communities and people were counted. So they're working through the 2020 numbers. I'll just leave it at that because they're significantly smarter than me. These are, statisticians by training.
Julia, just out of curiosity, obviously data is important, but to me, I mean, Shorewood kind of is what it is, and I wouldn't expect there to be big swings year over year or even in 5-year increments. And what I'm thinking is we're really looking at trending over time more than anything, right?
Right. So that's why we have so for example, for this slide, the median age in Shorewood actually decreased. When you compare the two 5-year periods, the median age actually went down. So more younger people are moving in or more older people are moving out. It's impossible to say which one of those two things is driving that trend.
Yep.
But that's a sort of over time comparison. But yes, I agree. It's also difficult if you just think about it for smaller communities. This is just one of the limitations is because you're having to compare 5-year periods, you're comparing over the course of a decade,
Right.
That's
Yeah.
a very difficult, it's difficult to capture actual trends when you're comparing such a long time period. So we really in the report tried to focus on anything that was like really obviously different, as opposed to saying like, oh, the number of housing units went down by 25 housing units or something like that. We were trying to really focus on the most significant obvious changes to give you a sense of where things were trending. And in this case, the median age was trending downward. So we called it out as a specific trend.
So it might be helpful to know, even though we don't have the data, I mean, obviously the point that's missing here is why did the median age go down? Did more old people move out or did younger people move in? And we have no way of knowing, right?
Correct.
Thank you.
The other thing that makes Shorewood unique is the household type composition. So that was weird. Shorewood has significantly more, again, speaking to your point, Peter, things that were really obvious and just jumped off the page for us. Shorewood had significantly more non-family households, and non-family households are defined as one-person households. So that could be, an older person living alone. It could be a college-age student living alone. Again, same dilemma here. It's difficult to know, which it is possible to dig a little bit deeper into this data, but you end up having these really wide margins of error associated with the estimates when you try to get more specific than this, because the community is so small. So it might say, 500 of these non-family one-person households are seniors, and plus or minus 495. Well, does that really tell you that much? It could be 5 or it could be 1,000. We tend to shy away from providing clients with those kinds of data points because we want to avoid you guys, seeing that 500 and just running with it. So we try not to get too fine-grained when the community is smaller, unfortunately.
So one person living alone in their home is considered a non-family household.
Correct. Or a group of people who are unrelated living together. So it could be multiple seniors who are cohabitating, but they're not related.
Or college students.
Or college students, correct. Or cohabitating partners, but they don't have children. All of those different types of groups would go into this category.
I have a question.
Uh-huh.
How are things handled like I don't know if this is the right term, but we have a very large retirement facility in the southwest corner are those all individual households? Are they considered individual households when you're living in a assisted living facility or a nursing home?
A nursing home would be considered group quarters. So that would not be they would not be counted in this population. They separate out group quarter population. So that anybody living in like a college dorm, a prison, or any kind of sort of communal space like that is a separate population that is not counted as households at all.
Does anyone online know what that facility is? Is it a nursing home? Because there's a lot of people that live there.
Is it the Section 8 project that you're talking about? I think it's called River
I'm not sure what the name of it is.
River Park.
River Park in the south. I know that the Section 8 senior project, it's a high rise. Is that what you're talking about, John?
There's 2
Very
buildings.
There's 2 buildings.
building.
Above Specter Field, that one?
Yeah.
Okay, yeah, those would be considered those would be counted in this because those are actually apartments. So
Okay,
those people are
I wasn't
considered
sure if they were apartments or what exactly they were.
Yeah, that's apartments. And
But
it's
that's probably why that section of Shorewood skews high
Correct.
in single households.
Yep, that's exactly why.
Yeah. Thank you.
So then moving on to the median household income, if you look at the median household income, it's lower than that of Wauwatosa and Whitefish Bay, but it's significantly higher median household income concentrated in the east of Shorewood, which I think is what everyone really kind of expected given its location along the shore or along the lake. And in general, median household incomes follow the typical life cycle earning pattern. So there was nothing that sort of jumped out in terms of that sense. In other words, as you get, early career, you start out relatively low, you start making more money as you progress through your career. And then when you retire, your income goes back down and you're back on a fixed income closer to what you were when you first started your career.
Julia, I guess one of the, obviously these last slides, the age, the income, these all again point to the diversity of Shorewood compared to just because of our location, it's near the university. There's all these different components, I think, that, as you say, make Shorewood unique, but I guess to that point, that's some of, as you think about it, your experience with other clients and, how does that benefit us? How does that challenge us as we think about affordable housing and the path we want to go on? I think those are some of the questions we want to answer.
Right. And to that, I would say that the benefit of that is that you have a lot of target groups, if you will, that you could, that probably need help. You have seniors who are most likely living by themselves, who are on fixed income. So they are going to fall into that lower income category or low to moderate income, depending on what kind of retirement they have. But then you also have the college age students who are also technically considered low income, but whether or not people actually consider them low income is a different question. But in the data sets, they're considered low income if they're not living with their parents, they're their own household. And if they're not even working, but they're supplemented from their parents, paying their rent or whatever, though many of those college age students will drive, like if you have a high college age or high college presence, that could drive up your poverty rate, for example, but it's not really poverty in the same sense of, single moms who are just trying to make ends meet working 3 jobs in terms of the need. But I guess in general, I would say the good thing is that it gives you guys a lot of different projects that you could potentially pursue in terms of providing affordable housing and meeting affordable housing needs. On the downside, you have a lot of people who probably need help, and it's going to be difficult to sort of come up with just one project that would be able to meet the needs of all of the different types of people that you have in your community. Does that sort of speak to that?
It does. And I guess the other question I have is, as we go along this project, that in my mind, and I know there are others, but the 3 sort of communities, if you will, that I guess we've been talking about or we've heard about is, as you said, the aging in place population, sort of the racial diversity question, and then the special needs community. Again, I know there are others, but those are the 3 that have sort of, to me, stood out so far as discussions around affordable housing and those 3 communities. And the report, I believe, does speak to some degree the aging in place and the special needs, but I feel like we're still, we're lacking to some degree, and maybe lacking is too strong a word, but the question of the sort of the racial diversity and those kinds of things, I'm not exactly sure how to get a handle on that, because that, to be honest, that has been the most active discussion about affordable housing and diversity, and making Shorewood continuing to expand its diversity, because we believe that builds a stronger community. We don't have good data on that yet, and I'm not sure how to get that.
So I guess my initial question would be, is it that you don't believe that Shorewood is sufficiently diverse, and so you're wanting to think about designing a project that could sort of create or increase that level of diversity and racial equity in the community because they currently don't have access to the community? Is that?
I would say, and this is me speaking, I think that is I'm not going to opine, or that is an area of investigation that we are doing right now. My feeling is, obviously, we could be more racially diverse. I think there's no doubt about that. We have an opportunity, or that's part of the discussion that we should be incorporating into this discussion. So, but again, we don't, not good data there, but I think anecdotally and just living in the community for a long time, we all sort of know what the composition is.
Right. When you say not good data, do you mean that we don't have good data as to the racial diversity in the community at all, or is there?
Well, I just meant sort of in this report, we don't really talk about it necessarily. There's demographics in this report, but not necessarily those demographics are
right. It wasn't something that stuck out. Right. Okay. Yeah. And in many cases, that speaks to the original part of your question, which is that because there was not a lot of racial diversity, it was not something that sort of, like I said before, we sort of identify the things that pop out. In some sense, that's what it didn't necessarily pop out. It wasn't, I could go back and look at the actual report, but I don't remember it being dramatically different from these other comparable communities in terms of the racial diversity, other than Milwaukee.
Yeah, right. And that, again, all of us on the call know that to be that is exactly right, that the communities, the communities that you're comparing to are
Also heavily white,
yeah, I
non-Hispanic,
mean,
right?
yeah.
Right. So we can come back to that in the, yeah, sorry, go ahead, Kathy.
So the
And
point,
John.
I think, and most of us know this, the village of Shorewood is economically, would you say, is very diverse?
I don't think I would say it was very diverse, but I would say it's more economically diverse than it is socially diverse.
Okay, and I think, so, excuse me if I missed this, racial data in here, it's coming?
We have it in the actual report, I believe.
Okay, because I mean,
but
you know,
again, we
Glendale is
don't-
obviously very more racially diverse than we are.
In Shorewood,
Right, but we're more diverse than Whitefish Bay.
correct.
But in terms of economic diversity, we're probably more diverse than those other neighboring communities, would you say?
I think we didn't look at the actual, so when we talk about economic diversity, oftentimes we think about that as like, what is the level of income inequality in a particular community or wealth disparity in a particular community? And unfortunately, again, going back to the size of Shorewood, that's not something that is typically measured because Shorewood is so small. I could look into it though, if you wanted. Most people who put together those sort of data metrics, they're looking at much larger cities. They might do, the top 100 cities in America and compare in that regard, and then sort of by extension assume that surrounding suburban communities have some kind of similar trends, or they compare at the state level as opposed to the city level. But I've never seen a level, like a measure of economic diversity in the sense of how much income inequality does Shorewood have, for example, relative to how much income inequality does Whitefish Bay have.
Okay,
I've never
thank
seen
you.
anything like that. John, did you have a question? I can't actually click it, but I can see your hand being raised. You're still
You're
muted.
muted.
There you go.
That was from before, sorry.
Oh, okay, sorry. Okay, so are we good to go on? And
Yeah.
Peter, I'm going to come back to the question about racial diversity and equity later on when we talk about sort of what potential projects you could think about for affordable housing and moving forward. I don't want to pin it down, obviously, and say, minority groups tend to live in public housing, or minority groups have lower incomes, or minority groups, if you build a low income housing rental project, you're going to attract more minorities. But technically, that is kind of what the data would suggest in certain places. So for example, minorities do have lower incomes in Milwaukee relative to white households. That's just a fact. Minorities are more likely to live in low income communities. I don't know, I can't say for sure that that's a fact in Milwaukee, but I think that most people would agree that that tends to be true in most urban areas. So I don't think anybody's going to fight me on that per se. And if you wanted the actual data, that's something that we could certainly talk about getting for you. But I do think it's fair to say, okay, if you want to increase the racial diversity in your community, then you need to provide housing at the price points that minority groups have incomes at, And so if minority groups in the surrounding communities that you're hoping to attract to Shorewood have lower incomes and they tend to be renters, then you need to think about a lower income rental project, for example.
Which is true for all communities.
Exactly.
That statement is true for everybody, yeah.
Yes, exactly. And maybe not in, rural middle America, like kinds of projects, but certainly for more urban and suburban areas such as Shorewood and the Milwaukee area.
Okay, thank you.
Okay, so then moving on quickly, the next couple of charts are again from the original report. Things that were unique about the housing supply in Shorewood. Probably none of this is going to be surprising to you guys. But one thing that we found was that Shorewood has a significantly greater percentage of older housing supply. Traditionally, people might use that as a proxy for sort of the state of the condition of the housing supply. But when I was in Shorewood, I did not identify any sort of large pockets of housing that was in complete disrepair. So actually, I think if somebody didn't actually physically go to Shorewood, they might look at this data point and say, oh my gosh, their housing is probably in really bad condition. But having been there, that's not something that I would actually take away from this.
So again, the purpose of this is, this would in general be viewed as a negative, you're saying?
It would in general be used as a proxy for like the potential for redevelopment.
Okay.
So if you have let's say you have 2 or 3 blocks that have a lot of older housing that are in sort of clustered together, you might think about that area as an area that could get some redevelopment and reinvestment activity in terms of improving the condition of the housing supply. But you guys would know whether or not there are actually blocks, for example, because we didn't drive, every single block when we were there, that might benefit from something like that. But in general, I wouldn't say it's seen as a negative from somebody looking at the report, but a developer might look at this and be like, oh, I might be able to go in there and demolish, a block or 2 of existing housing structures and build something new because it's so old. Units in the structure, again, I don't think this is anything that will surprise you guys, that you guys have a large supply of the duplex housing relative to other communities. And when you break that down by tenure, so the light blue is the owner occupied and the darker blue is the renter occupied, you see that a lot of the duplex are actually rental units, whereas most of the single family, the one unit detached, are owner occupied. This is not unique. I mean, the unique part is the duplex, because we don't really see that very often. But the fact that the multi-unit structures are more renter heavy than the single family, that's not unique. That's normal.
I'm sorry, just to state the obvious, make sure so the column 2, or the column that says 2 and 9.1 owner, 31.6 renter.
9.1% of owners live in duplexes and 31.6% of renters live in duplexes.
Yeah. So we don't have a lot of owner occupied duplexes.
Correct.
These are non-resident. Yeah. Okay.
Correct. They're like, owned by either
Yes.
somebody might own them, obviously, but then rent them out. They might be a private landlord that somebody might own 2 duplexes and rent it out or something like that. But it could also be some of the larger companies that own, a sizable percentage of that housing stock that operate rentals.
Yep.
And then in the next couple of slides, you'll see this green box. This is the updated data numbers. We didn't spend a ton of time updating things, obviously, since that wasn't the point of this, but I did want you guys to have some updated information just so you guys are, making more decisions as you go. So in this sense, the what made Shorewood unique was that the typical renter household was the non-family household, ranging from 15 to 34 or 65 and over, living in that southwestern or central Shorewood areas. So my guess is that the southwestern is driven by the seniors who are living alone, that are renters, primarily in those 2 high rises that John was talking about before. And then the central is probably more the younger people who are living in some of those newer market rate projects that are built along that main corridor that are more mixed use kind of area. And that the typical owner profile is not unique at all in this case. It's just a married couple, middle-aged married couple, and they're living primarily in the eastern and northwestern parts of Shorewood. And so then I don't know how big this is on your screen, but I did share the slides with Rebecca, so she will be able to send them all to you guys so you could see them, in your own time. But essentially what I did was I provided the 5-year 2019 estimates, which is the most current numbers that have been released, again, because the COVID issues delayed the 2020 data release. So in the 2019 5-year estimates, renter occupied units still dominate Shorewood. And then this will give you just a sense, going back to that original point that I was talking about of data comparison. So Kathy, in this case, 51.4% of households are renters. And if you look into this table over here, can you guys see my cursor?
Yep.
It was 54.3% in the 2017 5-year estimate. So I include a caution here. Don't look at that and say 54.3 and now it's 51.4. It went down. That's not what this means, because these 2 data sets are overlapping. You can't compare the numbers from the report to these current numbers. I'm simply providing you with the current numbers in case you guys are putting together some kind of, literature or something for the community. You were wanting to use obviously the most current information. So you would want to use this these numbers. 51.4% of the community is rent, or housing units in Shorewood are renter occupied, and 48.6 are owner occupied.
So Julia, we would, if I understand, we basically need to look at these as static data points, point in time data points. So for the comment earlier about, understanding trending, we, how do we see trending?
It's a bit difficult. So basically we do the trending comparisons in the actual report. But again, it's the 2008 to 2012 time period compared to the 2013 to 2017 time period.
Yes.
If
Okay.
you want updated trending comparisons, what you would need to do would be say, okay, replace that 2013 to 2017 time period, which we considered the current time period at the time, with this 2019 data set, and then replace the previous point in time period with the 2-year forward data set. And I can actually show you I have a slide further down, but we may as well go through it really quickly. And I'll come back and describe it, but just so you understand the comparison.
You're
So
basically saying grab the data, make each data set so that there's no overlap, and then.
correct.
Yeah.
So in this case, I did make this one data update for you guys in terms of the cost burdens. So we're comparing, this would now be the current data set would be the 2015 to 2019. And you're going to compare that to the one that comes before that, 2010 to 2014.
Okay.
So it's the same thing that we did in the report. It's just 2 years further, both of those time periods. The pre and post time periods are just moved 2 years, further contemporary, if that makes sense. So if you wanted to compare this number, for example, the renter owner, to see whether or not these percentages had increased, like the percentage, for example, of renter occupied units, if you wanted to know whether or not that had increased over time, you would need to compare that to that 2010 to 2014 number. Does that make sense?
Yes, thank you.
Okay. And so then again, housing supply, this gives you a sense of how the vacancy rate in Shorewood compared to the country as a whole, the state, and the MSA. And in the data that's used in the report, the vacancy rates are lower in Shorewood. I think that was consistent with what most people thought, that there was a housing shortage, generally speaking, there relative to other communities. And obviously, a housing shortage drives up prices. So that's one reason why you're seeing this lack of affordability becoming an issue. And then again, here's the updated data points, but don't compare those to these. So you see now the 2019 rental vacancy rate, they're saying 1.9%. Don't look at this and say, oh, but it was 0.7%. So vacancy in rental units has gone up. You can't say that, but you can certainly use these 2019 data points in any kind of write-ups that you guys want to put together to put out to the community. Use these 2019 numbers. That's the most current information that's reflective of Shorewood. So getting a little bit more into the meat of housing prices in Shorewood, this table shows the median home value, again, relative to these other areas. And then it also shows the distribution by price point. And the main point here is just that housing costs in general are high in Shorewood. I think you guys all knew that at the time, and that they're rising. So the median value in Shorewood, and this gives you those two data sets, those 2 5-year data sets that we compare in the report, the pre and the post. It shows you the increase. It went from 288,700 to 338,800. So that's a pretty sizable increase. The 2019 data point is 338,400. So it was, and the 2017 number, 338,800.
And Julia, my first thought when I was thinking about this was that, well, again, Shorewood's unique because we have maybe a broader spectrum of housing stock, if you will, but this data doesn't support that, right? I mean, if you look at some of the other constituencies, they're I would guess better balanced across the various
price point
buckets you have there, right? That we're concentrated in the 200 to 500 range.
You're skewed to the higher end. That is true.
Yeah.
Yeah. And I do have another chart, again, it's a little bit further down, but that can, this same data set compared to those other comparable communities. And it does show that you're pretty similar to Whitefish Bay. Whitefish Bay is a little bit even more skewed on the upper end. And then those other comparable communities that we compared you guys to are skewed a little bit more to the lower end or have a more even distribution. And if you want to see that now, I can actually just pull it up if you'd rather.
But we have to remember that only, what was it, 32% of our housing stock was single family detached housing.
So the median home, these prices are all housing units, all owner occupied housing units. So this would include condos too. And I break it down a little on a
Duplexes?
further slide. If it's owner occupied, yes. And not duplex. If it's a duplex, it would be the unit in the duplex, the value of that unit, not the value of the duplex as the whole. That would go into this. So if the duplex is, 800,000, each of the data points that are going into this would be 400,000 times 2.
So they just automatically split it.
Yes.
Ah.
I don't think that I don't know if they, that's a very deep data dive question, but I don't know that they allocate it evenly.
Because it kind of makes a difference.
But I think they do.
Considering how many duplexes we have. And
Do you have a lot of duplexes where one half of the duplex is significantly nicer than the other half of the duplex?
yes,
So that is, I guess in theory, you
live in
could
one.
argue it would average, but
I mean, I know that's getting nitty gritty, but I think it is unique. To Peter's point, we do have a unique
you do have a very unique
set of housing stock. And then, and with only 5-year data points till, I don't know, it's just, we might be the one community in the state that should pay for doing our own data research. Because it'd be really interesting to know some of these details.
In theory, in theory, the census should provide you with a full, in theory, the census that happens every 10 years is supposed to be surveying everybody. So the American Community Survey is a representative sample, like sampling design kind of survey. And they do this every year across the entire country. But the census is supposed to look at everybody. The problem is, again, because of COVID, there are questions as to whether or not the census actually caught everyone in the 2020 numbers. Even in previous censuses, so even in the 2010, they still have to make adjustments. They still apply weights to certain populations that are known to be historically undercounted and stuff like that. So we never get, 100% all the time in the census numbers, but in theory, the census should be a much better data point for you guys. And you're lucky in that the census just happened. You're unlucky in that COVID happened at the same time the census happened. So we do work a lot with smaller communities. And then I've been working a lot on some projects in the islands, like the Virgin Islands, as well as Puerto Rico and Guam. And they have the same problem that you guys have, which is they're actually a larger community, but they do the same data counting for those territories just because they're territories as opposed to states and cities. And so they're also desperately waiting for the release of these 2020 numbers so that they can feel like they have a better grip on it. You guys at least have the 5-year American Community Survey numbers, and they don't even have that. So I think most like government officials, planners, investors, grantor, like I've never met anybody who's looked at the American Community Survey numbers and said, I don't trust those. It's good. Like the questions that you're asking are really good to think about so that you can better understand the numbers, because your community better than people who are like someone like me who's just looking at the numbers for sure. But I don't think that anybody's going to look at this and say, and is going to challenge you as to the accuracy of these numbers, if that makes sense. So then this is sort of the same kind of data, but on the rental side. So this gives the median gross rent in Shorewood. At the time, it was $948. The current number is $1,004. Again, you can see sort of the skew for Shorewood. There still is quite a bit in the $500 to $1,500. It's the light blue number, but many of these, again, speaking to your point, John, these rents might be skewed by the large number of the Section 8 units that you have down in the Southwest, where their gross rent is based on their income. So if the senior who's living in that unit makes $0, then they pay $0. So their gross rent is $0. If you have a large number of units that fall into that particular type of housing category, that can sometimes skew your rent numbers low. So the reason why I say that mostly is that it's interesting that your gross median rent is nevertheless quite high. So that means there's obviously a lot of people that are paying, quite high rents in Shorewood as well. So you do have that sort of unequal distribution where you have a lot on the low end and then a lot on the high end. And this is the slide.
Excuse me.
Go
Excuse
for
me,
it.
this is
Sorry,
Joel
I
Estates.
can't
What-
see you. Okay, go ahead.
Is that by bed? I mean, there's no like differentiation between bedroom
Between
size.
unit
There's a
types, nope.
3-bedroom or 1-bedroom or
Nope,
studio.
they
That makes
throw it
a
all
huge
together as a
difference.
gross. Yep, they throw it all together.
It's
as a gross
almost,
rent.
okay, that's almost useless then if they're all 3 bedrooms, that's actually really affordable.
Oh, right. If all of the housing supply in Shorewood, you mean is 3 bedrooms, whereas all of the housing supply in Wisconsin, for example, is studios?
Yeah,
I
so
think-
now yeah.
Yeah,
Okay.
generally speaking, I mean, this is definitely a number that's widely used, the median gross rents as for a point of comparison. And you're not wrong though, again, in that if Shorewood.
If we were to
has-
use this data point, what's considered affordable then?
This is not necessarily a data point that you would use for affordability per se, other than saying the median gross rent in Shorewood is higher or lower than it is in surrounding communities, could be a signal. So if Shorewood's median gross rent is higher than, say, for example, Whitefish Bay or Glendale or the other communities that we compared you to, you could use that as a data point to say we are less affordable than these other communities on average in our rental market.
Or our units could be bigger.
Or that, yep.
Okay.
So I guess, is there a question, do we need to decide? I mean, section 8 is clearly a unique housing community in our community. Is there any reason that we would, for some reason, take them out of the mix when we're looking at, does Shorewood have enough affordable housing? Is that a policy decision that we need to decide as a group for in future discussions? I mean, what would you recommend?
Is that my phone?
I'm sorry, that's
Oh.
mine.
No, I was like, I don't know this office, so I just wanted to make sure it wasn't me. Yes, I think that would be so here's what I would say to that. One of the things, it's a chicken and egg kind of situation, right? So you have a lot of Section 8 units they're all for seniors or persons living with a disability. So you don't have any family Section 8 units. But because you have a lot of those, people who live in Section 8 tend to have lower incomes. So by definition, the sort of incomes, particularly in that part of Shorewood, are going to be lower. So which one came first? Was it that there were a lot of people with low incomes? Or was it that there were low income housing units that were built and then people with low incomes came in and that drove the income number down? I don't want to say it's impossible to say, but it was, built a long time ago. So it's very difficult to say whether or not, adding a low income community is going to drive down your numbers. But in terms of whether or not you want to exclude them, I'm not sure exactly what, if your question is, do you want to add more Section 8 housing?
I guess some people have said to me, we already have housing in Shorewood that's affordable for seniors and with people with
Disabilities, correct.
disabilities. And so how many units are in the Section 8? I mean, what percentage of our village housing stock is already low income and disability? I guess that's.
It's not actually that many, but okay, so here's the slide. It's 427 units. So it's quite a bit, but it's not, huge relative to other communities that we work in terms of the distribution. Like just having one Section 8 project in a community your size is
I
not
think I had it at 6%.
disproportionate. Yeah, it's not significant. But
Sorry,
I will say,
Joe,
go
sorry,
ahead.
6% of the total
Housing
units.
rental units.
Yeah, when I looked at this, I calculated 5.8%.
Thank you.
And when we surveyed the project, they were almost fully occupied. And, this is the fact that they weren't fully occupied was purely a result of some deaths that they had at the property. So there's like normal turnover. It's not like, oh, it's not 100%. There must not be enough demand. And they had a waiting list. So is it a significant waiting list, 2 to 4 months? Not necessarily. If you look at the other affordable housing units that you guys have, there's only 17 units, but it's at Light Horse. Now, those are not Section 8 units. Those are well, they're not technically tax credit, but those are restricted to households who have incomes at 60% of the area median income and below. Those were fully occupied with over 500 people waiting for them. So this would be, and again, this is something that I was going to talk about later, but we can just talk about it now. This would be, in my opinion, where most of the demand really is, because you don't have a lot of middle income kind of rental housing stock. You have a fair amount of the low income Section 8 stuff. Granted, it is only for seniors or persons with a disability. So you don't have any Section 8 for families. So that's something to keep in mind. But you don't have a lot of housing that's available and affordable to people who are, working in the service industry, for example. They're not making a ton of money, but they are making too much money to allow them to qualify for a Section 8 somewhere else.
And this 5.8% that Joe or you came up with, how does that compare with suburbs in our area, Milwaukee, the state, US? Do we know?
That's not something that we did. Mm-mm.
Yeah, that was my question too. Yeah. What's the
don't
context?
know.
How do we compare? Yeah.
Right. I mean, so, it's with your peers, right? Okay, thank you. So, I mean,
That's
is there any
something
way we can get that?
I don't think it would be that difficult. Let me think. So the Section 8 data is publicly available. The total number of units, it's kind of spotty, but HUD does provide that. And I could send you guys a link if you want. You could add up, it would be a little bit cumbersome, but you could add up how many housing units, for example, were in Whitefish Bay, which I think the answer is 0, but you could add up how many Section 8 units they had there and then divide that by the total number of rental units to get the comparisons.
If I could interject something,
Yes.
I think I brought this up at the last meeting maybe, but just if it is 5.8%, which is what I came up with, to get to 6%, we would need 20 more units. To get to 7%, we would need 100 new units. So looking at it as a percentage, I see it as a pretty insurmountable task to get much higher than we can make meaningful impact on a small number of units, but I think to percentage wise, we're not going to skew that very much. It's just too many units to add to our mix. My personal opinion.
Too many units
convert
total or Section 8?
That was included the 17 there plus the 427 at River Park. So 444 units total of affordable out of the total gave me 5.76% of our total units being affordable.
Okay.
So to get from that number just up to 6% would require 20 new units.
Mm-hmm.
And that's not, 20 units is meaningful, but as a percent, it's not meaningful. To get to 7% is still not meaningful. And it's 100 units. So, just for people having context, like the scope and scale of what this is, I think 100 units is meaningful because it's 100 units, but percentage wise, it's hard to move that number.
Mm-hmm.
So I guess the question becomes,
if,
what's meaningful to the village, to us, right? Is 20 new units or converted units meaningful, right?
You're not going to get the percent to change. You're not going to get the 10% any way, shape, or form. So yeah, you have to just look at the number of units, I think. And I think, if you did 20 units and we've got 2.1 million, that gives you whatever that is, $112,000 per unit to work with. I didn't want to sidetrack this. I want to stay focused on this and get to the conclusion. So
yeah,
that's a good point. My only response to that would be, I would encourage you to try to think about the affordable housing. I know that the point here is to provide more affordable housing, to try to think of these as being two different types of affordable housing. Because on the Section 8 really is targeted to the very, very low end of the income distribution. The LIHTC program, the low income housing tax credit units, or the 60% AMI units, those are very much targeted towards people who are working. A lot of times people will refer to these as workforce housing units, as opposed to affordable housing units. In some sense, if that's sort of semantics to try to make it more palatable to communities who don't want affordable housing. But I don't know, that sounds like that's necessarily a big problem for you guys in Shorewood.
Well, I think the other advantage of a development like Lighthorse versus the River Park is that Lighthorse is a mixture of different peoples instead of the entire building, like River Park being a Section 8.
Mm-hmm.
And I think that's a wonderful thing. I live in the Light Horse.
That's great.
I have
I
great
agree.
neighbors.
This is the model of the Light Horse, but more skewed with more affordable units. The Light Horse really has primarily market rate, with just a couple of affordable units thrown in. I would think that the better model would be mostly affordable units, maybe with a few market rate units thrown in. That would be the project that I would be aiming for. But again, you guys obviously know the politics and the resources that you have in your community. I will say, I don't know how much you guys want me to sort of backtrack into the data that we were talking about before, or if you want to just keep the discussion going in this direction, because I do have slides that specifically speak to what we're talking about right now. If you want to just keep going down that path, or if you want to.
Are we recording this in part for the benefit of people who couldn't be here in the village to view?
Yes.
In that case, my recommendation would be to continue along and let her give her presentation and get to the summary point and do it there.
Yeah.
Okay.
Since we do want to present all her findings.
Okay. So I'll just quickly, and some of this we've talked about a little bit already, so I can kind of go through some of this more quickly, but I did provide 3 slides in here that includes data points for you guys to use in any kind of materials that you put out to the community that provide the current demographic sort of key data points, so that you'll have this. And again, this is nothing, don't compare this to the data from the report, because this is the overlapping time periods, but you do at least now have, the current numbers for population, the current number of households, the average household size, median age, this sort of stuff. One thing to point out is that we pointed out in the report, but you have it again here, you do have this high college and graduate student presence in your community. So it's just something to always keep in the back of your mind about that sort of key demographic, and whether or not many of these students might qualify technically as being low income, but whether or not we really think about them as being low income in the sense that they need you to build affordable housing for them is a totally different kind of discussion. So oftentimes communities that have lots of college age students will end up having, inflated in some ways, low income numbers of low income housing households, because of these college age students. So obviously, whenever you guys design your program, you'll be able to decide whether or not you want that to be a group that you're even thinking about. Lots of those low-income housing tax credit projects that we had referred to, those projects where they're restricted at a certain percentage of the area median income, those are projects that are targeting people who are working but have lower income or lower paid jobs. Those oftentimes exclude explicitly college students from living there. So that's one thing that could maybe be also factored into your decision. If you want to make sure that you're not building a project that's going to actually just be occupied by a bunch of lower income college kids, then that's another advantage towards using that program. And then again, the tenure breakdown, and then the median home value and median gross rent numbers. Okay, so moving on to the housing affordability discussion, there's really two definitions, one of which is dominant, which is the HUD's definition of housing affordability, and that is that your housing costs are less than 30% of your household income. And housing costs means your rent or your mortgage plus all of your other housing related expenses. So if you're a renter, it would be your rent plus your utilities. If you're an owner, it would be your mortgage plus your utilities plus your property taxes and your homeowner's insurance. So all the things that go into what it means to have a house are part of this housing cost number. There's another group that came back and said, well, really housing and transportation are so intertwined. A lot of times people move to neighborhoods where housing is cheaper or more affordable, but their transportation costs are then higher because they're having to move further away from major employment centers in order to get that more affordable housing. And so their definition is that between housing and transportation combined, you spend less than 45% of your household income on that. I will say there is some discussion as to whether or not this definition of housing affordability should be re-examined in light of rising costs for other kinds of goods that society says are meaningful or need to have, one of which is higher education. So for young people in particular, student loan debt is a big hurdle for them. If they graduate with a lot of student loan debt, being able to qualify for a mortgage is definitely a concern. And then for seniors and young people, really for everyone, healthcare costs, as those things rise, whether or not you can still pay 30% of your income on housing costs, if higher education is now also 10 to 15%, if healthcare is also now 10 to 15%, at some point you go over 100% of your income. So that's just something to also keep in the back of your mind. But as you guys are talking about housing affordability, I think the key definition to use would be HUD's definition. So keeping housing costs below 30% of someone's household income. This just gives you a comparison of the two. And basically, all it's saying is if you're using the official definition, 34% of households in Shorewood at the time of that this data was collected, so this is a couple years old, we're paying over 30% of their income towards housing costs, but 53% were paying over 45% of their housing of their income towards housing and transportation. So it gives you a sense of, you know, affordability under those two definitions. So this chart breaks down affordability by owner versus renter. And the key point here is if you look at just at this table on the side, what you'll see is that the percentage of renter households, this column, that have incomes above 100% of your housing area median family income is only 32% versus 71% of owners. So it's basically sort of the inverse compared to your owner household. So the takeaway really is just that renter households have lower incomes. I don't think that's anything that's super surprising to anyone. You know, most people, it's sort of a life trajectory. When you get to a certain level of income, you buy a house, right? So that's not something that you guys should necessarily be concerned about, but it is something just to sort of keep in mind. If the goal is to target people based on their incomes, then and you're going to target people with lower or moderate incomes, then you're going to be targeting probably the greater percentage of your population are going to be renters as opposed to owners. So this table, it's from the report, but I updated it with the current numbers so that you could get a sense of how housing affordability has changed in Shorewood over time. And in the report, the trends are a little bit different than they are based on these current, the most current data, but not significantly. Nothing that is something that you guys should be worried about per se. But basically, what this table is showing, it breaks it down into owners that have a mortgage. The next set of numbers is owners without a mortgage, and then the last set is renters. And it's showing what percentage of your household income you're paying towards your housing costs. Okay. So the rows that are highlighted in gray would be the people who are considered cost burdened. They're paying too much. So these are the people who do not have affordable housing based on HUD's definition, okay? And then if you see the percentage, so for example, households with a mortgage or owner households with a mortgage, these are the numbers in the 2010 to 2014. These are the percentages for 2015 to 2019. This final column is basically whether or not these differences are statistically significant. And the reason that I include that is because obviously if you're just looking at these points in time, you might say, oh, look, you know, there's fewer owners with a mortgage now that are paying over 35% of their income towards housing costs because it was 23.7 and now it's 17.7. But that difference is not statistically significant. So that means that you can't actually make any conclusions about this particular trend. The only ones that are statistically significant are actually in the groups of people that are paying, you know, very little in their household income towards housing costs. So that's a good thing for Shorewood in terms of general affordability trends. And that's across the board. There's at least one category for, you know, each of these groups that are paying less than 30% of their income towards housing costs. So that's a good thing. Okay, that's the same one. So these charts again are straight from the report. So they're using a bit more of the dated data, but I included them here because this gives you a sense, while this table gives you a sense of, you know, owner versus renter, how much are they paying of their household income towards their housing costs. These charts give you a sense of, okay, so of those households who are not in affordable housing, so of the renters and of the owners who are paying more than 30% of their household income towards housing costs, where are they in the income distribution? That's what these charts are giving you. So this will show you, look, the renter numbers are in the green and the owner numbers are in the orange. And this is counts as opposed to percentages. So what you see is that in the extremely low income, so very, very low income renters who are cost burdened are the highest numbers. Severely cost burdened is second. So the severely cost burdened is people paying more than 50% of their household income towards their housing costs. So in this case, you see there are a lot of renters that are living in Shorewood that are paying significantly more than 30%, and in some cases, actually even 50% of their household income towards housing costs. So just on a pure number basis, the housing affordability problem is clearly concentrated among renters who have really low incomes. I think the fact that it's concentrated among people that have low incomes is not surprising or shocking. Obviously, if you don't have a lot of money, you can't spend a lot. You have to spend more of it on housing, since that's the number one primary need, that and food. So that's not shocking per se, but it is nevertheless give you a sense of where in the income distribution you might want to think about targeting your resources when you're thinking about people who need affordable housing, because this is basically telling you these are the people that do not have affordable housing. Having said that, I also provided percentages, and the reason is because you'll see in this table that actually the owner numbers are higher than the renter numbers. And what that is telling you is that if you happen to be an owner who is in the extremely low income category, then you are very likely to not have affordable housing. Does that make sense to people? So there aren't very many owners who have incomes below 30% of the area median income, but those who are definitely cost burdened. They're paying too much for their housing costs. My guess is that these are seniors who are living on fixed incomes. And as property taxes go up, as homeowners insurance rates go up, those are costs that are becoming more of their household income as their incomes don't grow at the same rate. Nevertheless, there obviously still are a large percentage of renters who are in the extremely low income category and also in the very low income category that are paying, more than 30%. Again, the lighter shade of each color is the more than 30%. So they do not have affordable housing by the definition. The darker shades are the ones that are severely cost burdened. So those would be the ones that are having the most difficulties if you were thinking about, again, targeting your resources.
These are existing residents of Shorewood.
Correct. Correct. Again, the data is a bit dated. So if you wanted it, updated stuff, then that is a different question, but these trends don't change dramatically over time. So I don't think that it's something that, if it were me, that I would think that I needed to update this data already, since the report is only about a year and a half old.
Well, with COVID, it might be worse.
Well, and so I do have a discussion of COVID. So yes, it is most communities around the entire country. I mean, we're seeing communities where the rents have increased by 30+%. Home prices have risen by 25%. So
that's coming.
Yeah, is that out? That was going to be one of my questions for you guys, because I don't have really detailed data at this point on that. That's usually something that people on the ground obviously know earlier than when the data comes out. But we do have a couple of data points that do show rising housing costs for sure. And
as an aside to my fellow board members, you guys, I always anticipated this project as bringing people in, but we should also be very wary of retaining these people who have already committed to Shorewood.
Yes.
Who we might lose or are struggling to make their payments.
Yes.
Let's keep that on our radar.
Yeah, so that's definitely one of my key points is it's sort of at the end, and since you brought it up, I'll just reiterate that. The question is who are you trying to help? Are you trying to help existing residents? If so, which demographic group? Are you trying to attract new residents or trying to attract people who have been priced out? If so, is it renters? Is it owners? What demographic group? All of these sorts of questions are things that you guys need to think about in terms of your priorities. But I do think that there are projects that you could conceive of that would meet multiple goals. Just because you build a rental project that's for working people, that doesn't mean that you couldn't have existing residents live there, as well as attracting people who are working in Shorewood but currently can't afford to live there. Just speaking to that, since we were talking about it, the COVID impact, the few data points that are current that have been released so far, CoStar, which is like a national group that collects data on various submarkets throughout the country. Their data shows that the vacancy rate in Shorewood, the rental vacancy rate, is 2% right now. That's well below the historical average of 5.3%, and it's projected to go down a tiny bit to 1.8%. So as vacancy goes down, prices are expected to go up. You guys had rent growth of about 3.7% last year. That's the strongest rent growth that's been reported in the Shorewood, and I should caveat, their version of the submarket is Shorewood and Whitefish Bay. So I know that you guys think of Shorewood obviously as being very different from Whitefish Bay, but again, this is to the size of the community. Sometimes the data sets are not quite as fine-grained as you might want them to be, but nevertheless, it does show the strongest rent growth in the past 10 years, and they're projected to continue to grow about the same rate. So those numbers to me signal that like how affordability problems in the rental community are going to continue to rise, if not get worse. On the owner market side, the home values, according to Zillow, increased by about just under 12% last year, which is a pretty significant increase, and they're projected to continue to rise as well. So speaking to the, you guys said it's coming. I think that's certainly something that you guys would know better than me, but I think I have yet to work in a market where COVID has not had significant impacts both on the rental market and on the owner market in terms of pricing. Unfortunately, incomes have not kept up with that. So it's really a question of how severe the impacts are going to be. In some places, wages have gone up a little bit to sort of try to attract labor, especially in places that are having really tight labor markets. I don't know if that's Shorewood or not. If you guys have seen sort of an increase or an uptick in what hourly wage kind of jobs are paying, you could sort of compare that to what the anticipated rise in costs are going to be to get a sense of how severe the COVID impacts are going to be on your housing market. But I think it's fair to say they're definitely going to sort of magnify the problems that were already there. Okay, so let's see, what time are we at? My computer does not have a time. Okay.
11:17.
Okay. So I don't,
Central.
we're starting to run out of time. I'm fine with staying, but I don't want to take all of your time. So I don't know. These next couple of charts are comparisons of Shorewood to other communities. And again, this is affordability relative to other communities. So we showed this chart earlier just for Shorewood relative to the state and to the MSA. Now this is comparing you guys to those other communities to give you a sense of how the distribution in Shorewood for home values compares to those other communities. And you can see that Shorewood and Whitefish Bay, which are the darker colors, are really, again, like we said before, skewed towards the higher end of the housing market, whereas Glendale and Milwaukee have more of the lower end housing supply. I don't think that's surprising to anyone per se either, but it gives you a sense of how you guys' housing supply currently at the price points that they're currently at are comparing to these other communities. Similarly with rents, you have the same point of comparison. Whitefish Bay is more expensive than Shorewood. I think that's probably being driven by the fact that Whitefish Bay has more new housing supply, rental housing supply, or rentals, I guess not rental per se, new housing supply relative to Shorewood in general, and new construction tends to be at a higher price point. But nevertheless, it is more expensive than you guys.
Does anybody remember, I'm sorry,
go ahead.
the last presentation we had, they did a calculation of what affordable rent was in Milwaukee. Does anybody remember what that number was? I thought it was like $500 or $600 when we went through that math at the presentation. Well, if anybody has that, just remind me what it is. I couldn't find it in my notes.
Is that using sort of the average wage?
Yeah, I forget how he went through that calculation, but it was very logical process to get to sort of what is affordable.
Right.
And it was for Milwaukee, but I was sort of applying it to Shorewood as well.
Yeah, you could definitely.
Doesn't it seem so dependent on the number of bedrooms? Otherwise, it just doesn't, it was like sort of like comparing houses with 5 bedrooms versus 2 bedrooms without a bedroom.
I've got one number for you. At that 60% AMI number that she was talking about, which the Light Horse employs, right? Yeah, that's usable, right? I forgot what you call that, but that 1 bedroom is $792, 2 bedroom is $959, and 3 bedroom is $1,101. Which isn't, 1,100 is not far off in Shorewood for a 3 bedroom from what they rent for.
I think this is probably what you're talking about.
No, there you go.
Is this it? Okay. So Peter, going back to what you were talking about, I think it's very easy to do a calculation of sort of what is the average wage, or you could even do it by occupation to try to decide, well, what would be affordable to somebody who worked at a restaurant? What would be affordable to somebody who was a school teacher? You could take the average wage and back into the price point that would be affordable for that particular type of occupation or that particular job. As you'd have to make a couple of assumptions. If it's an hourly wage worker, you'd have to say, okay, how many hours are they going to work per week on average to get to that affordable number? But I definitely think there's a very simple way that you could come up with that. And
I think we have that. I think that's what he did in the last presentation. I think he gave
I saw that too.
that number.
Yeah. So this slide is going back to the low-income housing tax credit program. This is the program that provides housing. It can be all the way to extremely low-income people as well. But the difference between this and Section 8 is that this has set rents. These are traditional apartments. You wouldn't necessarily know the difference between the Light Horse project and the low-income housing tax credit project if you just drove by. And the people that are living in these units, they're paying a set rent the same way that if you have a market rate traditional apartment, you're paying a set rent. But the rent is capped based on incomes within a particular community. So this table will show you. So if you went for a project that targeted 60% AMI, the maximum that somebody could charge for a 1-bedroom would be $950. The maximum that someone could charge for a 2-bedroom would be $1,140. Now this is assuming all utilities are included. So if the tenant had to pay their own electric bill, for example, you would have to back out of that cost. So if electric is, for a 1-bedroom, $100 a month, let's say, then the maximum that owner or the landlord could charge would be $850 instead of $950. But the idea here is that they take incomes in a particular area and they set these rents based on the idea that you're not paying more than 30% of your income towards housing costs. So it's what we would consider a mandated affordable housing. It's set by law that they can't charge more than what would be considered affordable for incomes within a particular area. This is being used. Well, this is the primary vehicle to build affordable rental housing in the country. Nobody is building new Section 8 housing anywhere. They might build new low-income housing tax credit with a Section 8 subsidy on top of it. That is a more complicated project, but they do that around the country, but nobody is building brand new, just straight Section 8 nowadays. And largely because if you hear people talking about sort of the missing middle argument, this is part of that missing middle. This is the workforce kind of housing. This is the housing that targets people who make too much to live in Section 8, but not enough to afford traditional market rate housing. This is the program that's used to target those kinds of people. And these would be the rents down here in this bottom section of what would be the maximum that somebody would be able to charge if you did this kind of a project. And the percentages are the different percentages of the area median income. So for example, up until, I don't know, 4 years ago, I can't remember the exact date, you used to not be able to do anything over 60% of the area median income. So these would be the absolute maximum. With the tax bill that passed a couple of years ago, they changed it so that now you can go all the way up to 80% of the area median income, as long as the average of the units in the building is at 60% or less. And what that does is allows you to go a little bit higher and get people that have a little bit higher of incomes, but still are not high enough income to be able to afford a market rate unit. So for example, you might be a 1-person household. You can't make more than $47,280 to live in this 80% AMI unit. The rent cannot be more than $1,182. So this would be a really key chart if you were thinking about a rental project in terms of the incomes that you would be targeting and the rents that are considered by definition affordable.
And again, Julia, I'm not a real estate person, but basically we as the community are subsidizing the developer to make their return be what they would want. So we're creating the housing for the people that we are hoping to build the diverse community. And we're funding that so that in the end, the developers kind of whole, they don't really care who's in the building as long as they make the return that they wanted. Is that correct?
Generally speaking, yes. So there are developers who specialize in the low-income housing tax credit program. So, and I'll just go down to this since we're going out of time, but this is examples of other, it would be helpful if I spelled Wisconsin. I will fix that and resend you a new PDF. But these are other municipalities that I was able to find, and I didn't, this wasn't part of what I was necessarily supposed to do for this presentation, but I thought it would be super helpful for you guys as you thought about how you could, like what to do next, your next steps. These are other communities that have done a similar, extended by 1 year their tax incentive districts and what they've done with that affordable housing money. And the second one of these links in particular will take you to a PowerPoint slide that gives like really detailed examples of 3 or 4 of these communities and how they've spent that money. And some of the projects have been for owner households. Some of the projects have been for rental households. A lot of them have been in combination with this low-income housing tax credit program. So what the communities have done they've said, okay, we have land, we're willing to give the developer some land. And then the developer comes in and does the tax credit project, all of this stuff. The developer does everything else. The community itself just says, we have land that we're willing to give to you for free or for a discounted rate or something like that. And that's what allows the developer to sort of be whole, like you said.
Yeah.
It also allows them to be more competitive for this low-income housing tax credit money, because this is a very competitive program. It's run at the statewide level, and it is something that, you know, the actual financials are very tight, so they don't have very much room, like wiggle room, the way that you might in a traditional market rate project. Oftentimes, they're not running a profit in year one per se, or even in year two, because their rents are capped. So there's not a lot that they can do there. But there are ways, for example, right now, there's a current discussion, and I think it's in Waukesha. Am I pronouncing that correctly? I think Waukesha, where they're working with a developer to do a loan forgiveness grant. So basically, they're giving a grant as long as the project stays affordable for X number of years. After that number of years, they'll write off 50% of the grant that they originally gave the developer upfront to cover their construction costs. So that's sort of interesting ways that the community can give money to a developer to essentially allow them to pencil together their project for this low-income housing tax credit program. And then the community has the ability to say, I mean, you guys could say, we only want a project that targets seniors. Okay, developer can decide whether or not they can make that work. You know, you could say, we only want a project that has senior units and has units for persons who are not seniors, but who are disabled. But we want them to be this low-income housing tax credit rents as opposed to the Section 8 stuff, because we think that there's people who are, you know, working, or seniors who are maybe still working in the community, who make too much to afford the Section 8, but not enough to afford market rent housing. Or you could say, we don't care who it's targeting, you know, just provide low-income units. You have the ability as the community, especially if you're providing some kind of financial assistance to a developer, to sort of drive some of that decision-making process. And I think that ultimately would be what I would suggest. But again, you guys, obviously it's your choice, but because there is such a need in the rental community there, or renter households do seem to have the highest number of people who are cost burdened. So they're the highest sort of the group, if you're thinking about a target group, they're the group that does not have affordable housing, but it tends to not be, there's the very, very low income people, but building a project exclusively for very, very low income people, extremely low income people, is very difficult. I've never seen a low income housing tax credit project that targets only people who have 30% of the area median income and below. The rents just don't work.
I'm curious, have you seen any, this is maybe getting a little off topic, but you know, obviously rental housing is important, but you know, obviously owning a house is the best case from wealth, you know, it's sort of the catch the fish or teach the person how to fish, right? And it seems like do you see, I mean, this is clear. Oh, here you go. All right. So yeah, well, how do we help with the ownership side of it too?
There's two ways that you can do this from what I've seen, and this would be something you'd have to talk to your legal team about to make sure that it would be something you could do. And honestly, I don't know if there's enough concentrated low income areas in Shorewood that this is even possible, but generally speaking, we think of it as you could offer assistance to households based on their income, owner households, or you can offer assistance to neighborhoods that have a certain percentage of people living in that neighborhood are lower income. And for those kinds of investments, you could do more like infrastructure development. You could build a park, and those would still fall within the sort of larger realm of improving housing conditions in a low income area. Again, whether or not you can do the area specific kinds of investments, you would need to run by your legal team, but for sure the household specific investments I think are doable. And some of these communities have absolutely done that and focused almost exclusively on owner occupied residences. And what they've done, especially for, let's say, seniors who don't have any extra income to pay for sort of modifications or upgrades to their home, they can't, not even upgrades, just like general upkeep, you know, so much of their income is going towards their housing expenses and their healthcare expenses and their food costs. They just don't have a lot of extra at the end to spend on general upkeep. So they're offering, you know, zero interest or low interest loans to low income owner occupied residences to do those kinds of upgrades. It might be $1,000. Some programs are $5,000. You know, these tend to be lower level investments than the rental project probably would be. But I've also seen a couple of places where they've done a, you guys even have the down payment assistance program. That's something that people definitely do to try to help people get into transition from a rental to an owner occupied situation. Some communities have actually worked with a developer to build new housing units, 5 or 10, nothing huge, but new housing units, and then sold them to households that had incomes below 80% of the area median income, or below 60% of the area median income, to allow for those households to move from renter housing into owner housing, and they cap the price point. So there are definitely a lot of options for owner occupied projects as well, for sure.
Have you seen, just out of curiosity, and again, I'm way over my skis on this stuff, but so I'm just combining the two in my head. So obviously a unit with, or a building with multiple units, like you were talking the rental, but maybe a condo scenario where people actually own their unit. And so we're doing some help with respect to getting them in that unit. I would think their costs might be a little lower because, I don't know, well, anyway, have you seen where maybe communities are?
I don't think I've ever seen a condo building. Well, I don't think, no, I think that is true. I think there have been condo buildings that have been built where a certain number of units were set aside to be affordable. Yes, that's definitely true. That has definitely happened. The complicating factor there is how the terms are written out. So, for example, I know for example, one in DC actually, that a friend of mine got when we were, in our 30s. She got one of the affordable units because we had just started our careers, and she had an income that was just at what she needed in order to qualify, but was below the qualifying max income. And there were really strict terms for her. She was not able to sell it at anything more than 3% annual gain. And when she did sell it, she had to sell it to somebody else who also had an income at that 60% AMI or below. There are other communities that I know of, one in Iowa, for example, that did this initially. They sold the units to affordable, like income restricted. So they said, okay, it's a 100-unit condominium complex. 10 of these units have to be affordable to people with 60% of the area median income and below. So the developer did that, and those 10 units went to people that were affordable, but there were no restrictions after those 10, after they sold. So as soon as they turned the next time, those people were able to sell them at market rents and make all of that payback. So you have to think a lot about how you're structuring, the restrictions on the resale of those units.
I can make a point about that because I've thought about that same exact thing. As soon as that first buyer then sells, you've effectively ended your Shorewood affordable housing program.
Yes.
Unless there is a way, and I like what Evanston is doing here with, it's almost reparations. If you can find someone who was disadvantaged specifically by Shorewood and get that specific person who has a reason to benefit from it, that housing stock, that's good. But if you just give it to anyone and they're allowed to take the full equity out of it and then sell it, you've depleted your housing stock again. And then real quick, the other one where they do deed restrictions that cap the limits on how much they can profit from it over time.
Mhm.
People argue that you've then essentially taken away from them their ability to profit from the real estate. And there's been cases where they've been sued because someone pays their mortgage for 20 years and then goes to sell their home, and they're not afforded the same rights as everyone else to profit from their house. It's pretty sticky to get into.
Yep.
Yeah. It's definitely a much more complicated structure than a rental project where you can, it's just mandated. But I mean, there are plenty of deed restricted communities around the country that have managed to make it work. But the equity argument for sure in terms of wealth, the benefits of wealth acquisition from sort of helping a low income family get into an affordable owner occupied situation and then not letting them benefit from the real estate market gains is certainly something that is come up as whether or not you're actually meeting your original goals. But I think most people, at least from what I've seen, have sided with we'd really rather keep that unit affordable than in terms of our goals. If we're having to choose, do we want to maintain the affordability of that unit, or do we want to help this one household, acquire additional wealth? Most municipalities are siding on the side of maintaining the affordability of that one unit. And the way they do that is through that deed restriction that runs with the land. It's a land use restriction that runs with the land. And then there's no, that goes also with the sale. So even if it's sold, it has to be sold to somebody who is low income. They can profit, but they can only profit by X percentage each year that they've lived in the residence or something like that.
Thanks.
Okay, so I have more slides, but I do think that was the bulk, that was the most important part of what I wanted to talk about in terms of we sort of jumped all the way to the end. But I can go back quickly and just talk a little bit more briefly about distinguishing between the different types of affordable housing supply. So particularly within the rental housing stock, we think of two different types of affordable housing. We think the mandated part, the mandated supply, that would be the Section 8 units or the low income housing tax credit units, where there's some kind of regulatory agreement that's in place that requires that those units be rented at a particular level and target people with incomes at a particular level. And there's oversight there. There's audits that are being done each year and stuff like that. And then the second kind of affordable rental housing supply is naturally occurring affordable housing, which you guys actually have quite a bit of. And that's simply market rate units that have no official rent and income restrictions on it, but that have rents that are below what are set at what is considered affordable based on the incomes of the area. And this chart sort of gives you that breakdown. So the yellow, I mean, I know it's kind of small, but the yellow rows are what would be the affordable rents back when we wrote the report. So anything that's falling below that were properties that were having rents that would be considered affordable for a household that made 60% of the area median income and below. Anything below the green rows would be considered affordable to a household that made 80% of the area median income and below. So there are projects in Shorewood that are affordable to households that have these lower to moderate incomes. But going to this point, many of those units, although they are technically affordable, they're being occupied by people with higher incomes. So they're not available. So oftentimes we talk about we want affordable housing that is also available to people with lower incomes. And that's what this slide speaks to, the gap for affordable and available housing supply for renters. And then there's another slide, very similar slide, that speaks to the gap for owners. And again, the main idea here is just that there are affordable housing units that are in Shorewood. It's just that they're being occupied by people with higher incomes. So those people are paying those are the people that are paying 10% or 15% of their household income on rent, as opposed to the people who are paying 30. So this is something that is a difficult sort of conundrum, I think, because often these are private landlords. There's nothing you can do to say you have to rent them to people that have lower incomes. You can't force that on private landlords. And who's gonna hold it against a landlord to choose the person that seems absolutely most qualified, which is probably going to be the highest income person that's applying. So there is the conundrum of, well, you do have some affordable housing supply in Shorewood, it's just not being occupied by the people that need it. But because it's not formally mandated, there's really nothing you can do to try to shift some of that supply towards the people who need it the most.
I think to me, this is what brings in the multi-level complexity of this, as Joe said. So if we look at this data, we have existing residents in Shorewood that are in need of assistance. And I don't want to say we have a mandate, but we've heard from the community that look at housing, and I'm going to not say affordable housing to Charlie DeSanto's comment, it is just housing. It's not affordable housing. It's just housing for people that, we're looking at housing solutions that also help us, again, accomplish our goal of continuing to be a diverse, welcoming community. I think that's just more questions swimming around in my head about those things, but I think that's where we are in our process. As we keep thinking through this, but I don't know if you have any thoughts on, as a community is looking at these two aspects of the opportunity.
Well, I think most programs, if you don't attach a residency requirement, and you wouldn't be able to for the low income housing tax credit project, that would be a violation of fair housing. But if you don't attach some kind of residency requirement to the ownership program, whatever ones you decide to do, in theory, those are available to anybody, right? I mean, they could be available to existing residents as well as residents who are trying to access Shorewood.
Right.
And chances are, depending on how much it's advertised, the people who are not residents who might benefit from those kinds of programs are going to be people who probably work in Shorewood, but don't live there and can't afford to live there, or have some other kind of pre-existing connection to Shorewood. I mean, it's unlikely that you're going to attract 100% of people who come to benefit from your program are not going to be existing residents, just purely from a marketing and information transmission kind of standpoint. The majority of people who are going to benefit are going to be people who know about it, who are going to be existing residents. Rental projects, I think, are more likely to attract people who are not existing residents, purely because people who are renters have fewer attachments to where they're living. It's much easier for someone who's a renter to move from one community to another. If you're buying, or if you're already an owner, then it's much more difficult for you to pick up and move than it is for someone who's renting. So I guess that I think that speaks a little bit to your question. If a rental project is probably more likely to attract more people who are not existing residents, but that doesn't mean that you're not going to also benefit existing residents as well, particularly if there's some kind of information campaign that's done at the local level first before the project officially opens. You start spreading the word, for example, among the community that there's going to be this new affordable housing complex, then people are going to get their names on the waiting list first. That would be a way that you could try to skew it a little bit towards benefiting existing residents over people that are going to be relocating to Shorewood. But in general, I think all of these different types of projects, unless you attach a residency requirement to them, there's no reason why it couldn't be something that benefits both existing residents and help create that diverse community that you guys are really looking for.
Thanks.
So this gives you the incomes that are, I just wanted to include that are attached to these rental gap analyses in case there's something that you're particularly interested in. These are obviously dated. This is from 2016 because that's what's attached to that data set, but it gives you a sense of, okay, so if we were going to do a project that targeted very low incomes, well, what would that look like? That would be a one-person household that made $24,000 at $600 a year, sorry. A four-person household that made no more than $35,000 a year. So these income tables, the reason that I'm including them is that it'll give you a sense of sort of what kind of income levels do you guys want to target? All of these households have a need for affordable housing, people in all of these different income levels. So you could say, all right, well, how can we pencil together a deal? We really can only do it at these higher price points. So we're going to probably need to target these people at the 80% AMI level, as opposed to the 50 or the 30%, because at the 30%, it's just too hard for us to find a builder who's going to build a house and then sell it to somebody that only makes $24,000 a year, for example. So that's the main reason that I included that. The next couple of slides are more about the for sale housing market trends. And I should have said at the beginning, anything that's in a green box in this slide is the updated information. So you'll see this green, you can kind of see a green border around this. There's a green border around this. This is information that was not in the original report, but I included it here so that you guys would have a little bit more current information about more current trends.
Great, that's helpful. Thank you for doing that.
Oh, of course. So this is from Shore West Realty, and they track, general price trends. And currently, actually, it looks like the price points are down, but we rarely use that because that's really a function of like what's on the market. And so it's not really a good indicator of general affordability. We tend to focus more on Zillow's home value index. And the reason is because Zillow basically says, okay, if every single house in their market sold today, what would each of these houses sell for? And then what's the median value of all of the housing? So it's a bit more complicated, but it does eliminate the clear skew that the general real estate market trends show. If you look at a real estate agent and they say, oh, well, prices are down by $75,000. Well, that's because only 5 houses sold last month, and it's happened to be lower price point houses. So we tend to look at the Zillow home value index. And this shows, like I was talking about before, a sizable increase over the past year. I've provided the comparison points in the other comparison communities to give you a sense of how prices have changed in those other communities. They've also risen. Surprise, surprise. This is just COVID impacts for the most part. I don't think these projections were in place prior to COVID. Most markets were seeing increases closer to the 3 to 5 to 6%. So definitely an impact from COVID. I also wanted to break it out because I know that you guys talk a lot about the difference between the single family versus the condo. So I've provided slides of updated current trends of each of the different communities. Shorewood is the green line for a single family versus the second, and you'll see here Shorewood has the second highest median home value for a single family, second only to Whitefish Bay, versus the condominium values, which I think this is quite interesting because, and you guys probably could speak to this better than I could because I haven't been in Shorewood over the past year, but you do see a sizable increase in the value of condos in Shorewood over the past year. And Shorewood does have and has consistently had the highest median condo value of these different relative communities. So when you think about Shorewood as condominiums as being your sort of affordable owner occupied housing stock, that's certainly true relative to single family homes, but you are seeing this bigger increase in the price point of condos in Shorewood relative to other communities. So it's just something to sort of keep in mind. This is the same as the previous table that we were talking about, but this is for the owner market. Here again, you see a gap in terms of the affordable and available housing supply. So there are this just to give you a general sense. So for example, owner occupied households with incomes of less than 100% of the housing area median family income. There are 815 households that fall into that income category. There are 1,100 housing units that the price points of those units would technically be affordable to those households. So that means that there are enough. However, not all of them are being occupied by those people. So there's a lot of higher income people that are living in those units. So there's actually a deficit of 485 units for households that make less than 100% of the housing area median family income that are owner households. That's how you read these charts. And so you see these gaps, and the key line is the surplus or deficit of affordable and available. You see these gaps at all income levels for both owners and renters. So again, this speaks to you guys do have, on the one hand, it's bad because there's a shortage of affordable and available housing for both owners and renters at pretty much all price points at the lower end of the income distribution. On the other hand, that gives you a lot more flexibility in terms of what you want to do in terms of, affordable housing. There is a lot of people that need help, and you have more flexibility here. And if you don't have the land, or if you can't make a larger project work, then you could certainly justify doing or spending the money on owner occupied improvements, because there's clearly a need there as well.
And Julie, I'm just curious on the gaps, just for context, is Shorewood, are those gap numbers out of line with, again, our peer communities or even nationally or anything else?
So you can look at, I want to say it's called Bridging the Gap. I think it was in one of your previous presentations. Let me see. Send link. I'm making a note to send you guys a link to this. So there's an organization that does a similar type of analysis like this, but only at higher level geographies. So at the state level and for some large cities. To do this kind of analysis takes quite a bit of time because there's a lot of data that has to be downloaded and then sort of adjusted. And so to do this for each of those 5 other communities would have been an extensive amount of additional work. We didn't do it for the other communities. We only looked at the housing gap for Shorewood. Sure. But you can at least compare it if you look at this report to larger municipalities. So I can definitely send that link so that you have a sense of how to compare.
Well, and again, I think what all this data just continues to show us is, the market is what the market is. And if we as a community want to do something, we can't rely on the market, right? I mean,
yeah. I mean, yeah, exactly. It's a market failure, and it's something that can only really be fixed with sort of government intervention, right? I mean, that's kind of the point. And I do think I can't speak to how these numbers, the gaps, compare to other municipalities or other even higher level, because I haven't looked at the more current numbers. But in general, I mean, I can certainly say that nationwide, this is not unique. The fact that there's a housing gap both for renters and owners, it might be a bit more unique on the owner side because there are certainly smaller communities around the country that are much more affordable. For example, I just did a project in Selma, Alabama, and the average, I mean, you could buy a 4-bedroom Victorian, beautiful old house. It hadn't been fully restored, but still for like $45,000.
But they're not a great place on a Great Lake. They're not a great place on a Great Lake. So.
Exactly. So not somewhere that a lot of people want to go. That's why
I
the
love
housing
Selma.
prices are
I've
really
been
cheap. But nevertheless, like so on the owner side, there might be more gaps here than there are sort of nationwide, but I can't say for sure. But I don't think it's uncommon at all to say that there's housing gaps for people at the lower end of an income distribution, both on the owner side and on the rental side nationwide. It's just a problem that happens everywhere because the market doesn't respond to people with lower incomes. I mean, that's just a fact.
Well, and yeah, you call it that's interesting. You call it a market failure. I mean, really it's supply and demand, right? Right. I mean, I hear you that maybe it's a community failure or yeah.
I think I'm using that as an academic term, so I can take my sociologist hat off for a second. A market failure in the sense that that if you rely solely on supply and demand, this is not a product that you're going to ever get.
Right. Yep.
And I don't think I think that's true everywhere. I guess that was my point. Like Shorewood is not necessarily unique in terms of its market not meeting those needs. I will say, so one thing that we did, and this was sort of included in the report, but these are the original gaps that we identified in the report in terms of the housing supply and the price point. So affordable and available, both for sale and for rent housing units was like the number one thing. So that's why we're talking about that today. One of the things that I do think is important to keep in mind is that most of the more recently constructed rental projects in Shorewood were market rate projects, with the exception of some of those units at Lighthorse. Most of them are, general market rate, higher income price point projects. Those are not necessarily a bad thing. The knock-on effects of building a project like that or allowing another project like that to be built, if there was somebody who wanted to do it, is that it does provide some downward price pressure on some of the older housing supply that's existing in Shorewood, some of that naturally occurring affordable housing supply. So you do have the potential, if there was, and I say this only in the sense of not necessarily to advocate that you guys should go out and try to find a developer who's willing to build a market rate project, but if there was somebody who wanted to, you could indirectly end up with more affordable rental units through allowing a project like that to be built, because it could put some downward price pressure on some of the older housing stock that's existing in Shorewood. Again, that's not mandated, so it's not like you wouldn't by definition get those affordable housing units, but it's a way that you could potentially end up with some more affordable housing units.
Couldn't you, I guess, wouldn't we argue, but the market is the market. And yeah, I guess I hear you that people are moving to those units and freeing up some supply, but given the overall supply demand in the community, I would think that would just keep going. Now that something's available, the demand for it is going to be through the roof. So I would think if we did market rate housing, thinking it's going to draw some people there, we'd also have to do something to offset, to make it affordable for people to come into that housing that's being freed up, right? Because they can't necessarily come in at the market rate for that place either.
No, it depends on how much additional demand you have relative to the new units that are added, right? So if you add 100 new units, are there 100 people who are waiting on the outskirts who are willing to pay the current price points for an older rental unit? Or do those 100 people not necessarily exist, or they want to live in Shorewood, but they've never been able to afford that current price point, and so those older units now have to lower their rents a little bit in order to be competitive with that new housing supply. That's a risky, I mean, that's not something that I would be advocating for as a strategy that you guys should pursue. It was more a sense of if that was something that somebody wanted to do already, and to not necessarily resist it because off the cuff, because it's market rate as opposed to affordable.
I wasn't challenging you. Yeah, I guess I was just saying that that was only half the equation. It seems like if we were going down that path, there's another part of the equation, which is
how much demand.
What do we do to help people come into that freed up supply? Because just the numerator denominator in our community, the numerator of new supply is never going to be big enough to offset the denominator of the demand of people that want to come in.
Yeah. So that's a good point. So then we talked about the COVID related impacts that you guys could expect, I guess. And then I guess the end of the presentation was really going more towards, okay, so you guys have decided to do this. Now, what do you do with the money? And we've talked a lot about this and sort of different possibilities. And again, this was not necessarily what Rebecca had specifically asked me to speak to. It was more what we've already talked about. But I did want to include just a little bit because I do think it's important because this is ultimately your next step, right? I mean, that's the idea. You want more affordable housing. How do you get there? And so I did include, and this is from the original report. These are the recommendations from the original report. And many of these are things that could be done through the use of the money that you guys have now freed up. Again, we've talked about a lot of these, but like redevelopment, means tested down payment assistance, a condo project, a rental project, a mixed use project, all of which might have specifically set aside affordable units, the accessory dwelling units as a potential strategy for adding more supply. And again, basic economics, add more supply. Yes, is demand gonna, if demand mirrors the increase in supply, you're not gonna have any impact on pricing. So that is definitely the unknown here, is what happens to demand in that scenario. But certainly not adding more supply is definitely going to cause prices to go up. So I guess if your two choices are adding more supply and hoping that that causes some downward pressure on price points versus not adding any, and you know that price points are going to then go up, obviously the adding supply is the ideal route. This is also the current numbers. So I had the previous numbers in the report next to that rental gap analysis and owner gap analysis so that you would know what the price points were for those that analysis in particular. But these are the current numbers so that you would have a sense of, okay, if we want to target, very low income households and we want to help them buy a house, well, a 4-person household can't have more than $42,000, make more than $42,000 a year. Is there a way we can get a household that has that income into an owner occupied situation in Shorewood? I don't necessarily go. That's a penciling thing on the finance side, but.
And these were I think these were some of the numbers we saw in our the last presentation.
Yeah,
was
that
given
makes
to
sense.
us that, yeah.
Because this just came out recently, I think. So it just in terms of potential mechanisms, again, we've talked about this, but rental housing. So one thing that we haven't necessarily discussed that much, but I do think I saw one slide, I think in one of the previous presentations that you guys have had on the Section 8 Housing Choice Voucher Program, and that there aren't a lot of vouchers that are being used in Shorewood. And the reason is because voucher payment standards, you'll see them in the lower left corner here. This is for the Milwaukee County Housing Authority. Those are set based on fair market rents at the county level. So this tends to disadvantage higher community areas in terms of access to those communities, because if you take the fair market rent for, let's say the county, and that's including the city of Milwaukee that has lower rents than a place like Shorewood, and you set how much you're willing to pay for somebody who has a Section 8 voucher based on those county-wide level rents, they're not going to be able to necessarily access a higher market area like Shorewood with that voucher. So for example, somebody who's getting a 1-bedroom voucher right now is able to go out and find a private rental for $905. Are there very many 1-bedrooms that are renting for $905 in Shorewood? According to CoStar, if you look at the table above it, the current 1-bedroom average rent in CoStar is just over $1,000. So you'll see the mismatch between what the rents are in Shorewood and what the current payment standards are for the voucher program. So essentially that means that voucher holders are sort of priced out of the Shorewood housing market. Not necessarily there's a way that they can pay the difference, but I mean, if you're extremely low income and you need a voucher in the first place, do you have an extra $100 to pay that gap? Probably not. So this is the reason why you don't have a lot of people with Section 8 vouchers. Well, this is one reason, living in Shorewood. The second reason is that, landlords have to be willing to rent to somebody who has a voucher, who may have, well, by definition has a lower income, may also have, other types of background check issues that the landlord doesn't want to deal with. Maybe they have an eviction on their rental history or something like that. So you also have to have landlords who are willing to buy into the program. Some places have done this where they've tried to develop a program where they could incentivize landlords to accept the below market voucher payments in exchange for some kind of top up. So the local community might say, okay, well, the housing authority is only going to give you $905. We'll cover the difference for whatever the landlord wants to list it at. I think this is like a high administrative cost kind of solution to the affordable housing problem. But it is nevertheless, I wanted to put it out there because it is something that it has high administrative costs because somebody has to do all this paperwork, incentivize the landlords, check to make sure that everything's going correctly, work with the local housing authority, which can sometimes be a nightmare. Like there's lots of moving pieces. It could be somebody's full-time job. So I don't know if it would necessarily be worth the investment. But it's something to consider because maybe there are landlords, maybe the gap is really only $100 or $200 a month. And if that's all it is, you might be able to get 20 or 30 or 40 people who have vouchers who could now rent a private unit in Shorewood. And if the gap is only $100, that's not that much money that Shorewood's having to pay as a community to help get those people into the Shorewood housing market. And again, this could be a way that you could speak towards that racial diversity and racial equity, simply because the percentage of people who are on vouchers tends to be more minority communities. So that's just something to think about.
If I could interject there.
Yes, go for it.
I think that's a powerful one. And I've done a lot of thinking about this and a lot of research on it. And just to my fellow members of the CDA, this is something we should circle back on, because it is with our housing stock and our deficiency being having too many duplexes. This can actually be our strength in this aspect. We can leverage that. And if you do incentivize, I think you don't have to ask for the best hearts of landlords, they'll look out for themselves. If you give them even a bonus, if they're asking $1,500, the payment's $1,200, we offer them. I don't know if we're allowed to do like a tax incentive, but even if we just make up the difference, not only make them whole, but incentivize them, give them an extra $100 or $200 a month. There's plenty of people that would go for that. Or there might be people that would go for that. And that would, fill the seats, as it were. That would get people here.
And this is within existing housing stock too, so.
Exactly.
Yeah, I agree, Joe.
I think
and attracting people from other communities and giving them access to the Shorewood housing market.
Yes.
Correct. I think this is a powerful one we should be focused on. My 2 cents.
Yeah, agreed. Definitely a doable.
Great.
And it's a way to get low income people into those lower rent units, instead of people with over income being able to rent for a lower price.
Yeah.
Julia, just on your point about, maybe landlords don't want to rent to certain constituencies due to, as maybe defaults or things like that. I mean, obviously those things, that's sort of the vicious circle of, and once someone gets into stable housing, those things can go away. So have you seen where communities, I don't know, or how do you help lower that tension between the landlord and potential tenant on some of the historical?
Peter, if I could take that one, if you don't mind. I'm
Awesome.
actually probably the only person here who's had Section 8 tenants. It's the process, and it's the stigma. There is a stigma, and the process can be a little difficult with them. But I think there's actually less onus on the village if the Section 8 is handled by the federal government. All those that process has been completed, and the landlord just needs to demonstrate that they have that tenant in place. And as long as, I think that the rents are guaranteed within Section 8, and if the village would put another guarantee on that to make the landlord hold for any damages for all rent payments within a lease in exchange for them, accepting that tenant. I mean, yeah, I think you overcome all those obstacles and all those. No one's going to maybe just want to do it because it is a bit of a pain and it is a bit of a risk. If you obviate the pain and the risk and make it an incentive, then I think you can get there.
Right. What Joe said is
That's
what
the role. That's our role. That's the village's role. And that's what we can do.
That typically somebody comes in on the back end. It's almost as if you have a co-signer on the lease. But that would be, again, a question for legal if you wanted to go all the way in and do something like that, or if you just wanted to do the top up, but not necessarily guarantee the rent payments. That's sort of two different magnitudes of incentives. You could try to just start with the top ups so that you're not sort of on the hook for the entire term of the lease. And then if that didn't work, then you could maybe go one step further to try to add an additional incentive on top of that. But certainly doing something where you're sort of guaranteeing the lease for the landlord is something that would certainly help. I think the stigma itself is just, I mean, that's something that only is going to break with the tenant with a good tenant, Section 8 tenant coming in and the landlord having a good experience. And if the landlord ends up having a bad experience with a Section 8 tenant, then they're probably going to not participate in the program again. It's an unfortunate thing, but it is. A lot of times nonprofits will guarantee too. I don't know if there's any nonprofits in Shorewood that might work in that space, but they might guarantee the term of the lease, or they might do something like pay the move-in costs, something like that. Like if the landlord insists on having the first month and last month as a deposit, an extra deposit of some sort or something like that. Some nonprofits will fill that gap.
And I also feel just as a community, I think we can downplay that negative. I mean,
Yeah,
we as a community want this to, we are
you're looking
we're
for the
motivated to do this. We want to do this. We want people to come, so yeah, I feel like that all kind of goes away. I just want to say we're at 12:05, so we're 5
Yeah.
minutes over. I do have a hard stop like right about now, but I wanted to just see if people had any questions. I see Kathy has her hand raised.
I just had a quick question. So regarding that, is it 2.14 we have? If you went towards this voucher, would the goal be to say we're going to do this for 20 years or until the 2.1 is gone plus the administrative costs? Is our goal to, like, that's our next discussion too, is do we want something that goes in perpetuity, or do we want to say this is a 10-year program, this is a 20-year program?
Yeah, I don't think we're at solutioning yet at all. I mean, I think we're,
Yeah, I'm just curious if Joe
Just
had any
to
thought.
wrap your head around it, I did do it. If you divide the 2.1 by 10 years, you've got 17,000 a month. You can do. I had it somewhere. It's
Right.
reasonable. You can do a lot with it
Yeah, you
in a 10-year program, quite a bit. So
I think you'd have significantly more money than just the Section 8 top-up program.
yes, for sure.
Thank you.
I just wanted to end on this last slide because I think this will be useful for you, and to say specifically this second link, because there is it's a PowerPoint presentation from 2020 from 3 or 4 of these other communities and what they've done, the kinds of programs they've done, how they structured it, the different terms and stuff like that. And it's just to give you an example, a couple of different examples of what other communities in Wisconsin are doing. And obviously not that you guys need to do the exact same thing because your needs are different, but it will give you just some ideas to think about and start talking about as you move forward. That's it for me.
Julia, thank you so much for that.
Of course.
I think it was really good to go, other than the misspelling of Wisconsin,
I think there might be one of them.
to go through this again, but also I really appreciate the updated information you put in there. It's helpful to look at that, to know where we are now. And it's just, it's a reminder of I think the challenge and the opportunity, sort of the double-edged aspect of what we're looking at here, to just work through these numbers and as we move towards solutions. So I really appreciate your presentation.
Great.
Do we have any other questions from folks on the call?
Nope.
Is Rebecca still on? I don't see her.
Should I move?
I just wanted to touch base with Bart first. Just remind
Okay.
us next steps. What are we looking at next?
Yeah, Rebecca did have to leave. She
Okay.
had some computer issues. And so next steps would be, I believe it's in the packet. Sorry, apologize.
All right.
Future presentation. The Shorewood Speaks will be coming up next in November here. So item 4, if we're ready to move to that. There were some questions in the packet. Tyler Burkhardt is also on the call. He coordinated that conversation through the Human Relations Commission. So if we have a brief moment just to briefly go over those questions, just to confirm that the CDA is in agreement with the ground rules, so to speak, that would be the next steps in terms of the educational series that we're putting together. Tyler, are you on the call?
Yeah, I'm here.
And Julia, would you mind if you could stop sharing possibly? I don't know if I can cut that off or not.
Yeah.
Okay, perfect. Yeah, so it's on page 9 of the packet. There were just some questions with respect to how the next session would play out for the Shorewood Speaks event.
Yeah, so as the CDA, you're going to co-host it with HRC. So just A, are you okay with the ground rules? And then B, we're asking each committee to have one person help co-host to do the introduction and the conclusion part, which myself and Becky will certainly help with some of those talking points for you. So we just need someone from the CDA willing to serve in that capacity. And then everyone else, we just encourage to attend, to listen and collect thoughts and feedback from community members.
Do we have a date?
So it's November 18th. Six to 8 PM.
Sorry, November 18th, you said?
Yeah, it's a Thursday.
And I'm sorry, you're looking for what from us? Yeah.
So if you review the memo, we have the ground rules established. So it was just getting some quick feedback that you're okay with the ground rules. And then I need a volunteer from the CDA willing to help to introduce and conclude the event, which we'll put together talking points to help you out.
Yeah, so we'll have someone able to do that, whether it's me or someone else. Did Joe just raise his hand? Did I see that?
I think Joe is pointing to you.
Yeah,
I
I
think
was
you've been nominated,
volunteering you,
Peter.
I second Peter.
Yeah, all in favor?
Aye.
Aye.
Thanks, Peter.
That's how quickly you lose control of a meeting, huh?
Thanks, Peter.
No, yeah, it's fine. And I believe I'm available that day, so yeah.
But yeah, and if any members, oh, I see Kathy's got her hand raised.
I did have a question about, we're asking people to only make I statements when talking. I guess I would prefer to not tell people how to speak. Could I get some background on this?
That's so we don't represent the CDA, maybe?
Yeah, so I think it's just making sure that, like, if someone is in a meeting or at the Shorewood Speaks, they're not making it personal by mentioning, using, the opportunity to, attack someone. Instead, it's, just saying, I feel blah, 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 not representing a group as well. So they're only making statements on behalf of themselves and not the group. So I think those were the two feelings that the HRC had.
I think as long as we use the word should, I don't think we should start to be, speed police. It's a problem.
Right. Yeah, I mean, for the facilitator, who's going to be Frank Cumberbatch, I think we'll tell him if people get away from my statements, it's not like we're going to take away the floor. It's just something that we want to encourage people to do.
So again, Tyler, our main goal, right, is to provide a person's thoughts and also any constructive ideas around it, but keep it focused to sort of, right, your thoughts on things, not necessarily what you think of someone else's thoughts or that kind of thing.
Yeah, I think that's a fair representation.
Okay.
Okay. So
I guess I have a question about how do we keep it focused on, there's been so much good information in this today, and there's no way you can say, please look at this and come informed. But, I guess my question is to make it how can we help to make sure that it's an informed discussion and we're talking about reality instead of, or is that not a legitimate, relevant concern?
Yeah, my quick answer to that would be two ways. One, when we market it, we're going to link to all the presentations that have been done previously to encourage people to watch those in advance. And then my other response would be, that's why for the first 30 to 45 minutes, we're having speakers talk about and just summarize real briefly the concepts that have been discussed. So if that's like the first meeting that people are coming into, they have that general background as far as what is feasible. So hopefully those two things will help. You can't obviously control it fully, but that will be our two ways of trying to help from a contextual discussion perspective.
And I think any place we can say, oh, we just had a CDA meeting on that. There's the video. Please go and watch that, and that will likely answer your questions, and then just sort of set it aside and move on. That's what I would say too. Okay. So sorry, Tyler, you were in particular looking for the volunteer, which I think you got. Anything else on that item? And if
I have volunteer, and then I could say any members of the CDA, if you have any feedback that you want to send to like Bart, Becky, or myself.
Okay, I'd like to take that offline, and I'll give you a call on that, or we'll talk about that. Okay. Thank you. Any other questions on that one from the group? All right. Financial report, again, I'm not going to spend a lot of time here. This is, again, we continue to just monitor this. I don't even know if, do we have anybody that could theoretically speak to this on the call?
Yep, it's just provided for reference. Mark is
Yeah.
not on the call. I don't think there's anything of note to point out. So it's just provided for your reference in the packet.
Yeah, I mean, all the numbers seem pretty in line with historical and past, so.
I would just like to say thank you to everyone who worked on getting the ending balances. I believe we're at business loan summary. We have no ending balances. Is that correct?
I would defer that to Mark, but if that's what you're seeing,
Think-
you know, feel free to
The
follow up with
Kensington
Mark.
liquor, the
think that was
Kensington
the
liquor
last one,
balance
yeah.
was, the Kensington liquor balance was paid.
Yes, correct. I think that is right. Okay. And with that, I think, unless any other comments, if do we have a motion to adjourn?
So moved.
Second? Did I hear a second?
I'll second.
Okay. All those in favor?
Aye.
Aye.
And again, thank you, Julia, so much. Really, really helpful.
Yeah.
It helped. Let us know if you have any other questions or if you need anything else.
Will do.
Great.
Have a great day. Good luck with
You too.
everything.
Thank
Bye,
you.
everybody.
Thanks,
Bye.
everyone.